Well, joining us now for a closer look at the commodity space is Tim Evans from Longleaf Trading Group. He joins us live from the CME in Chicago. Tim, hello to you. Great to have you with us. We'll move into the oil and gold space in just a moment, as I know this is an area you're watching closely, but I just wanted to get your take on some of the broader market action that we've seen in that overnight session.
Well, it's all about stocks today. You know, I mean, with the movement of the Fed last week, I mean, it's really put a damper on commodities. The U.S. dollar's caught a bid here, and kind of the best of breed amongst asset classes definitely is the security space. You know, new all-time highs again.
And of course, in terms of how this is shaping the gold market, we know the precious metal has been coming under pressure in the wake of that decision by the U.S. Federal Reserve to raise interest rates. We look to gold, of course, being that hedge against inflation, being that hedge against central bank activity. With this in mind, what are you seeing in the gold plays at the moment?
Well, I mean, the price action that we're seeing in gold, you know, following the Fed last week, I mean, is predictable. You know, the common understanding as it relates to the relationship between gold and interest rates are that they have a negative correlation. So, you know, as the Fed took rates higher and signaled that we would be seeing another rate hike later this year and into 2018, you know, gold predictably turned over, took the brunt of that announcement. You know, but I look at it from a different angle. I mean, I think that's a very simple understanding, and that just gives you kind of a snapshot understanding of that relationship. I mean, if you go back and, you know, over 3 or 4 decades and really analyze the relationship between interest rates and gold, you know, contrary to popular understanding or popular opinion, is that they actually have a positive correlation. I mean, by its very definition, yeah. I mean, if you raise interest rates, the borrowing costs go higher, which, you know, decrease the appeal of owning gold. But you always have to look at the market environment in which that's occurring. You know, the market environment you're typically seeing rates moving higher is in an inflationary environment. You know, what we saw last Wednesday were rates going up when, you know, inflation expectations were actually falling. You know, my assumption is, and my expectation, you know, is that we're ultimately going to need to see inflation expectations pick up for the Fed to continue to move later this year on into 2018. You know, so I expect that we will see some of those inflation expectations pick up, and I think we'll see that positive correlation of interest rates and gold move together.
We also see gold as being quite the political and also economic gauge. To your mind, and whilst, as you flagged, somewhat predictable, the downward move that we have seen in gold, there was still a level of uncertainty, certainly that slightly more hawkish tone than had expected. In terms of uncertainty, and of course, we also look to the Brexit negotiations and the political uncertainty that could inspire as well. Is this likely to create some reverberations?
Yeah, I mean, absolutely. I mean, you know, we're entering the Brexit negotiations today in Brussels. You know, there's, you know, the EU and Britain are very far apart, you know, in terms of their stance on Britain's exit from the EU. You know, so as those talks move on here this week and in the next, you know, I'd imagine there's going to be, you know, we'll see some volatility based on, you know, what we're hearing from those meetings. So, I mean, I think that really ultimately could provide nothing but a floor for gold here, you know, assuming on what transpires in those discussions. But I mean, we have a variety of political here in the United States, obviously with the Trump administration's issues. You know, we have to remember we still haven't seen any major piece of legislation signed. You know, you know, the latest on the healthcare negotiation or the healthcare law that the Republicans are trying to get through is they're going to try to get a vote in the Senate, you know, by the July 4th date. But you know, I mean, they're known to punt those dates pretty often, and you know, I don't think anyone's holding their breath with the expectation we're going to see that vote by July 4th. But I mean, there's a lot of issues, obviously on the geopolitical front as well, that you know really could provide a lot of life to gold. You know, we're in that kind of cycle right now where you know we're not a lot of those issues that are kind of on the back burner. You know, they're not front and center, but you know, all it takes is one small move in any one of those major issues, and gold will have something to work with. So, on the back of the interest rates going higher and some of these political, geopolitical, tensions not really festering right now, it's an environment in which gold is going to move lower, and that's what we're doing right now. But, a lot can happen in a very short period of time.
Well, and just with that in mind, I wanted to speak to one of the developing geopolitical issues that you and I have, in fact, been discussing over the last few weeks, and that is indeed Qatar and the Gulf region. There's been some commentary coming through from the Qatari foreign minister in around the last hour or so, saying that Doha is ready to engage and address the concerns of other Gulf states in a proper dialogue with predetermined principles, saying that the crisis could end around the dialogue table if there are clear principles on that dialogue. He will also visit the US next week to discuss the economic impact of the blockade and how it will impact global efforts in countering terrorism. Also saying that Doha is taking legal action to open up paths for its aviation and lift part of the blockade. So with that in mind, of course, we still look to this as a developing issue and how that's likely to impact both gold and also oil.
Well, based on that, I'm not really sure. I mean, this is a pretty fluid situation. I mean, this could go a number of different ways. I mean, this could obviously, create a lot of issues with respect to the production cut on the oil side of the equation. I mean, this could ultimately be something that, materializes into something greater, possibly, a greater regional conflict between the major players, in the Middle East. Obviously, with the situation getting a little more tenuous in Syria, I mean, it really just adds to a very volatile mix that's already there. Anything that really adds to the levels of uncertainty, anxiety, what have you, gold is going to be the market that's going to benefit from that, over any other market, in my view.